Hello traders and welcome to another video review. Today is Monday, May 16th, 2022. Let's start with the Forex calendar. Overnight data were mostly released from China in form of the fixed asset investment, industrial production, retail sales and unemployment rate. Only the unemployment rate beats the expectations of 6% with the actual number of 6.1%, which means the unemployment rate increase in China. Bank of Japan Governor Hirohiko Kuroda gave a speech 7:15, so we will definitely take a look at the Japanese yen today. During the London session, we don't have too many market movers here. However, we got the European Commission economic forecast, and it's always good to see what are the forecasts for the future from the European Commission point of view. And these data are scheduled for release at 11 a.m. During the New York session, we got data from the Canada in form of the housing starts, manufacturing shipments and wholesale sales, so not really market movers. However, during the later part of the day, we got the FOMC member John Williams' speech. Then we got the speeches from the Bank of England Deputy Governor for the markets and banking David Ramsden, and MPC member Margaret Sanders will give a speech as well. Those speeches might be quite interesting for all of you who are inclined toward the fundamental trade and fundamental analysis. So I think we should start with the Japanese yen first to see what is going on this market. Daily time frame chart of the US dollar to Japanese yen is showing us signs of the exhaustion. We got double top made after the breakout to the upside, and then the shooting star candlestick pattern on the daily time frame chart. We got the decline with the low at the level of 127.52, small bounce. However, the zone between 130 and 132 is still the supply zone for the market participants. As you can see, the bearish divergence or negative divergence is now being played out by the market participants, and the momentum has fallen almost to the level of 50, which is of course the neutral level. Please keep an eye on the further developments of this on this pair, because any breakout below the lows of the 12th of the May, which is 127.52, will likely give us some sort of the down move towards the lows of the 27th of the April, and those lows were made at the level of 127.95, and then the next target is 127.15. If market gets there, then this decline would be the biggest during the uptrend, which means that is a part that is no longer a part of the uptrend. This is of course the overbalance of price and time and a completely new cycle. Please watch 125.15. If we talk about the US dollar to Japanese yen, let's talk about euro to the Japanese yen. What is going on here? As we can see here, we got another higher high, but it's on a very interesting spot. 140 round level had been tested. We got the pin bar here, shooting star here, pin bar here, confirmation to the downside, bounce, and second leg to the downside. So what do we have here on the euro to the Japanese yen? Daily time frame chart is clear for now. ABC pattern to the downside. However, please notice the fact that this still might be wave 1, wave 2, wave 3, wave 4, and we are waiting for the wave 5. That momentum declined sharply below the level of 50. So any violation of the lows from the 12th of the May, which is at 132.63, would mean that another wave to the downside will come on the even more negative momentum. the next target for this kind of a wave is located at 151.59, and then in a case of extension, the next target is 128.27 towards 127.32. The nearest immediate technical resistance is located at the lows of the wave A, which is around the level of 134.76. So please keep an eye on this level, day traders, because any violation of this level would mean the test of the highs of the wave B. We can put our another line here, 138.25. So this is how the euro to the Japanese yen looks like. Let's take a look at gold. Spot gold market daily time frame chart is showing signs of weakness, and recently we just hit the level of 100 at 100 of the Fibonacci extension of the wave A measured from the top of the wave B. This level was located at 1821. It was hit with no problems. The actual low was made, let me just zoom in. The actual low was made at the level of 1798. So very nice progression to the downside, very well respected by the market participants. 100% hit the trend line, violated again. So right now we are waiting for the market to hit another level. Let me just find out. Well, we can say that another level would be 127. Let me just put some Fibonacci on the market. 127%. I need to zoom in, and 127% would be somewhere around the level of 1773. So this is the next extension of the wave C. If the market hits this level, then the length of the wave C would be 127% of the length of the wave A. Very nice target, very nice level for the market participants. Where is 161? There you go. 161% is somewhere around 1711. Those levels are right now, especially the last one, are getting closer and closer to the level of 61% of the whole movement of the recent down move. We don't need 200, we just need this too. 127, 161. However, if the market will hit 161, that's most likely the wave 3. So in that situation, wave A would be wave 1, wave B would be wave 2, and then this long decline towards 1711, if we get there, is of course the wave 3 of the overall impulsive decline. What is the bigger picture? Just take a look at this. Double top, we can call it a double top on a spot gold, and then 3-wave decline. Okay, that would be corrective, of course. That would be corrective, but we cannot forget about the situation when this would be a long-term top first, and the second one, and that would be 1, 2, 3, 4, 5 to the downside. But that's only possible when we break 1668. Then we got the clear confirmation of the double top and the 5-wave decline to the downside, and that means the market is of course developing a new cycle, impulsive cycle to the downside on the spot gold market, which is why it is very, very important to keep an eye on the levels on the gold market right now. Let me just change the colors of the technical resistance: 1833 and 1823, the nearest technical resistance on gold. And last but not least, let's take a look, of course, at Bitcoin. What is the Bitcoin doing? After the very nice pin bar made below the level of 30,000 with the low of 25,367, we have, of course, a bounce, very shallow bounce towards the old demand zone. Now of course it turns out to be supply zone. Please notice the fact that this zone is very important because it's been tested many times before. Last year in the June we broke below this level, and it looks like today we are resuming the rally to the downside, despite the fact that we are still trading on the extremely oversold market conditions. So how does it look like? How does it look right now? Very negative sign here. It looks like a bearish engulfing. However, this is a daily time frame chart, so it's not yet closed. This candle has not yet been closed. Breakout above the supply zone, okay, but above 30,196. However, the local high was 31,390, so not that much for Bitcoin. Next target for bulls, 32,905, 34,290, and the key technical resistance, 37,747. We are still trading below this trend line, and it looks like this is a full 5-wave decline that has been completed, or it is about to be completed. So please keep an eye on the Bitcoin for the next few days, especially on the test of this pin bar around the level of 25,367 if we get there. The next technical support is 24,917 and the 24,000 as the level of the psychological level of the round number. Very nice for all of you technical traders. That's everything from me for today. Thank you for watching this analysis, and I hope I see you guys next time. So take care and bye bye.